Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, May 17th. Good to be with you guys here this morning. Lots to go over, back from break here. So it's good to see everyone in the room. Kelly, great to see you. Pooja, good morning. Took a short on Aussie, yeah, 74.28 out, most of it at 73.90. Nice trade, holding the last 10%. We'll definitely go over Aussie. It is on the menu. Sandy, good morning to you as well. Good morning. Kazam, Mark, Pete, Pooja, Sarab, Ziad. Good to see everyone here in the room. Amen, Kelly. Yes, yeah. Pin is pulled out. We're back on 2 feet. Still on crutches, but improvement every day. Thanks for that. So on the menu for today, guys, obviously, before I get started, I just do want to take a note. Look, there's a lot of headline risk that's coming out. Obviously, with the whole Trump, Comey debacle, I want you guys focused on price. You know, these type of things are going to filter through the market. You're going to see intraday gyrations. Largely speaking, from a trading standpoint, our setups have been pretty consistent. Okay, this doesn't really change anything. So keep your eyes on price. Be aware of what's going on with this situation. But again, you know, for us here, it's all about the price and it's all about the trade, and that's what we're going to focus on. So for today, obviously, first on tap, we're going to go over the dollar index coming into a key area of support. If you've been following the swing trades, me and Jamie are looking at the same exact levels. We're now approaching that region of 97.67, 97.87, an area of which the dollar index could find some support. So we'll take a look at that. Euro dollar, obviously coming into a big resistance zone. We'll touch on Aussie yen, Euro Kiwi, and Sterling Kiwi, both of which were highlighted last night. I do want to take a moment to go over the previous update. Aussie dollar, Kiwi dollar, kind of lackluster over the last couple of days, but holding some pretty key ranges above support. Dollar CAD also coming into interesting support levels, and dollar yen as well. That's what's on my menu today. So let me know if you guys have any questions. Sandy wants to look at Euro Aus and Sterling Aus. No problem, Sandy. I got you. Gold, silver, and copper, gold, silver, copper, and oil. Sarub's got a big request here. We'll go over all of them. Gold is interesting. Copper, I'm not really too big of a fan on, but Sarab will take a look at the commodity block. Copper, oil, and what was the last one? Silver. And Pete wants to look at the SPX. Gotcha, Pete. So we made a new high last month, or last week rather, right? So there's a new high day close in the SPX that I'm following as resistance. We'll take a look at that as well. Okay, got a nice long list here, so let's jump right in. So to start off the U.S. Trade session, before we get started, here's that critical area of zone of support. Here's what we look like last night. It extends between 97.67 and 97.87. 97.67 representing the larger 50% retracement of the advance off the lows we made in 2016. More importantly, 97.67 would be 2 equal legs down off of this year's high. Okay, both of those converge on basic parallel support. This parallel, my friends, is the same slope as the operative pitchfork we've been working with off the highs from February and March. You can see that the upper parallel caught that high very nicely. Nice pivots along the lower parallel, or the median line rather. If you take a parallel off that, these 2 points touch pretty well. So the slope has been pretty consistent. And we're now testing, again, the lower parallels here, which converge on that same Fibonacci region of support. Okay, big region here for the US dollar. If we were to take, and this is argument's sake, just for, you know, a drill here, guys, even if we were to take basic trendline resistance just off the yearly highs, take a parallel of that and extend it off the low from March, you can see that that broadly puts, again, trendline support right into this key region between 97.67 and 97.87. Momentum hasn't quite gotten into oversold territory. Do still have a little bit more room. To be clear, I'm not advocating trying to fight this just yet, but recognize the fact that we're definitely coming into an area where the immediate downside bias is at risk. So you don't really want to be too aggressive on selling the dollar, in my humble opinion, unless we break through 97.67. Now, on a closed basis, there's nothing really to hold this up. If this gives out, I mean, you have a target, the 618 key retracement, that takes you down to 96.47. And then obviously the swing lows from the election here, that's 95.89. But right now, you know, you want to be mindful of immediate downside pressure or chasing the downside here in the dollar index. Okay, daily chart. Here's what the intraday looks like. Even within the confines of near-term price action, here's your weekly open. Straight on collapse. There's that support structure again, right? We're being tested right now. Momentum isn't oversold, so it's not the time you want to start fighting it. Once this pops back above 30, if we're able to get above the Asia highs, then you start to look for possible recovery, initial resistance right back at former support, 98.70. Okay, and now at this point, we had left yesterday, just heading into the Asia session, we had left our bearish invalidation level at the monthly open. I'd be a little bit more comfortable at this point because of slope, bringing it down just a tad to that 97.67, or excuse me, that 98.69 level. That's a 2016 open, if you guys remember. Now converges on that median line. We'll continue to keep that as our near-term bearish invalidation. So as long as price action stays below that, I do think you're at risk for that larger break in the dollar. Immediately heading into the U.S. session, be mindful of this support. Okay, so again, dollar index, this is the ICE dollar index, extremely heavily weighted the euro. So we're going to go over the euro next, which is obviously, unsurprisingly, at resistance. As 60% almost of this index, it's typically going to be an inverted euro dollar chart. So with that in mind, here's what euro dollar looks like. Start off with the daily. Really highlight this critical area of support. I mean, this is exciting stuff, guys. If there's going to be a pause in the rally, like this is where you want to start to look. We've been constructive euro for quite some time. We're stretching now again into some critical areas of resistance, namely 110.94 into 111.28. Here's what we looked like last night on euro dollar. Okay, and again, this is sort of the key region that we were looking for. We talked about it, more than 2 weeks ago here of that target just shy of 111. We're right now trading, or yesterday's high was just right there at that 786 retracement, and here we are pushing 111.12 or so. So this key region of resistance is defined by a basic and simple 786 retracement. This is of the decline from the highs that we made on the election, okay, in November. So I don't really want to stress this retracement so much because, again, these spike highs tend not to be your best Fibonacci retracement. What's the word I want to use? They don't tend to be your best reference points, right? Emotional spike highs. We talk about that all the time. Nonetheless, when they converge on key regions of resistance, slope, moving averages, then it becomes significant. And right now, the operative formation that we've been in for euro, which has been over the course of the entire year, has us at the upper median line parallel, that 786 retracement, and larger, the broader 618 retracement of the entire decline off the 2016 highs gets you 111.28. Today's high so far, 111.22. Okay, so again, not necessarily calling for us to start shorting the euro yet, but be mindful of the fact that you're coming in some pretty hefty resistance. A Fibonacci key 618 retracement of an entire yearly range is always something I'll be paying attention to. Forget that it's a fib retracement. Shift your eyes to the left. Look how many pivots we have seen at this level. Close highs that we made back in November. Swing lows that we made back in September. Swing lows that we made back in August, right? Some pivots right back here in May and June of last year. So irrespective, no matter how you slice this, you're coming into initial area of resistance, and I no longer want to be issuing any new, fresh, long exposures from here on euro. Okay, I do still like the long side, like I said, but you want to be mindful here. Here's what the intraday chart looks like for euro dollar. There's a 4-hour. Oh, by the way, here's the performance of the U.S. dollar heading into the session. I just wanted to highlight that the yen is the top performer, up 0.67%. Obviously, you're seeing some of those haven flows start to materialize. Gold moving higher, yen moving higher. All your classic sort of plays as the com block sort of decays a little bit. But best performer, we'll go over some of the yen crosses today. 0.67% to the upside, with the dollar sort of on a split performance so far. So with that in mind, here's what the euro looked like yesterday. I guess we should start in the 240. We were coming into 110.95. There's 111.28, and there we are right now. So be mindful, guys, of the long side here. I'm looking for some exhaustion. 4-hour momentum is still in the overbought condition, so I don't want to press it yet, but I'll be looking for some possible near-term exhaustion heading into the U.S. session. On a scenario and again, I'm just giving you the scenarios that could pan out as you head into the U.S. session. On a scenario where the U.S. market opens and this thing plows through, don't touch it. Don't touch it. See if 111.90 offers anything. I don't really think it will. It's a basic 88.6 retracement, and there's not really much pivot. But that would be sort of like the next level I would start to look at. I really am not going to touch this if we start plowing through this into the U.S. Open. I'd need to stay below 1095 to like this downside targets. Broader bullish invalidation, 109.30. As long as we stay above the weekly open, this is basic slope. So again, guys, to give you a little breakdown, we were working with this median line formation for some time. Okay, and I wanted to keep this slope on for a couple of different reasons. Obviously, we broke above the upper parallel, but it did offer some resistance. Obviously, we broke below the lower parallel, but again, once we popped through, we saw acceleration into the median line. So a lot of times what I like to do is just remove the upper bounds, keep the center line, and you could see that that center line converged here again and kind of kept us from trying to do anything on the long side for the euro. So that center line over the next couple hours still converges on 111.29. Watch that region of resistance for the euro. That's sort of the barrier. Okay, we pop through that. Look for 111.90. The high day close comes in at 112.55. Any questions on euro? Certainly a big area of resistance. And again, here's what the 120 minute looks like and the 60. Okay, you're seeing that momentum starting to get a little tired. Some divergence here into the highs, albeit divergence above 30 is typically going to be your weakest signal. But certainly you are seeing the hallmarks of what could be near-term exhaustion. Wouldn't be surprised to see the U.S. Open see a spike through this region and then a pullback. Again, the break below 1095 for me, especially the overnight lows, would be sort of an indication to start looking for a little bit more of that pullback in euro dollar. That's a mouthful, but that's what the euro is doing so far. Any questions on where we stand on euro dollar heading deeper into the week here? All right, that is number 2. Number 3, let's just take a quick touch on Aussie yen. I know it's an interesting pair. Pooja, I don't know if you've been trading this one, but certainly a nice breakdown in overnight trade. We've been tracking this one for a few weeks right now. Here's what the daily chart looks like, and here's what we looked like last night. Okay, so the basic premise of this trade, and you all have seen this chart before, was 84.55 into 84.42. Now that represented a big region of resistance that we actually opened May trade right into. In fact, if you go back into the archives here and click on the previous update from 5.15, or excuse me, from 5.1 at the start of the month, we were right there into that resistance zone at 84.42. So we started the month there, which means that was the monthly opening range highs. We pulled out, made a 618 key retracement of the advance right into the lows, and now right back at the opening range high. So the focus on these kinds of trades, guys, is the fact that, and again, here's what we look like on the first, is the fact that you've opened the market for the month of May with a very clean opening range. And now that opening range takes place right above critical support, which is 82.65. What's that 82.65? Let's take a look. So you have the 618 retracement we just talked about from the advance off last month's low, also defining the monthly opening range low. You have the 200-day moving average, which has been a clear-cut pivot in price for the last couple of years. Resistance, 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 breakthrough support. Little pivot here is support, breakthrough resistance. That converges on that 618 retracement. Take it back a little bit, that median line formation that held for a good 3 months, the upper parallel converges on that key region. And last but not least, the basic operative trendline support we've been following here on SB since the lows in 2016, that trendline converges there as well. Okay, and that actually caught support last month. So if you're not sick of hearing me saying it, this is a big, big region, okay, for Aussie yen right now. I do think you do see some more further downside pressure. Pooja saying, missed Aussie yen this time, exclamation point. I think we'll get more opportunities, Pooja. We just got to watch this key support region here. I would extend it into the 82.97 region as an initial area of support, guys. This is a basic 38.2. I graded out for a couple of reasons. let me take a step back. Once we break through a retracement from a larger range like that, unless it's a 50, a 618, or one of the key ratios, I tend not to stress it. But the 83 handle, 82.97, has been a decent pivot. Okay, it was the high back here on the 18th of last month, and I kind of just want to leave that pivot here. So you could see some soft support here. The larger focus is 82.65. That huge cluster of support there with the 200-day moving average, 2016 trendline support, and former median line resistance. Okay, let's drill down. Here's what the intraday chart looks like. Okay, it's a 4-hour. A couple of different things going on here. So here's the pitchfork that we were working with last week. Okay, let me bring back the charts from last night. Okay. We were noting that we had again made a rejection of that key resistance, 84.41, 84.55, and the focus was on a move below the weekly open. That break would really validate the reversal off of resistance. It's exactly what we got. Here's your weekly open. Trendline support, median line support, 618 extension, break to the downside, sees the monthly open, which was the first target here. And the 38.2 at 82.97 is what is on tap, okay? And that's sort of what we're looking at right now. The 38.2 right here, 82.97. This is the big region we just saw on the daily chart, right? 82.65. This is the butter zone here for Aussie yen. If we break below that, things start to change dramatically, in my humble opinion. Okay, we're talking about a multi-year slope. We're talking about a key 618-year retracement. We're talking about a longer-term moving average. A break and close below that does change something. So, Mike, what does that say? What are you trying to say, basically? I'm trying to say, personally, I'm looking for a dip into 82.65 for some near-term exhaustion. Now, it would be just on a scalp basis because, again, you haven't broken the monthly opening range yet. So I would be looking to be playing a little bit of a rebound off that level. But largely speaking, our focus is on whether this breaks or not. Immediate risk is still for a dip into that key region. Okay, here's what it looks like on the 120. Again, momentum sitting at that 30 line right at the bottom there. See if that breaks into the U.S. session. You have an outside day candle, or you have an outside 2-hour candle, 120-minute candle here, which could be exhaustion into that low. And again, if you take it into an hourly, you still have momentum struggling to make any new fresh lows as price action continues to press those lows. Hallmarks of possible near-term exhaustion if we make another low heading into the U.S. session. Watch 82.65. Big, 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 massive region and the opening range low for Aussie yen. Questions? That is number 3. We'll go over Aussie in just a moment. I don't think it's quite as exciting versus the dollar right now, but with what's happening in the yen, this is an interesting pair. Okay, Aussie's the worst performer on this session. Yen is the best performer on this session. So no surprise that this setup last night worked out pretty well. Aussie yen going once, going twice, and sold. Number 4, Euro Key. Here's what Euro Kiwi looks like. So, from a trading standpoint, very similar situation to what we're looking at with Euro Dollar. The one thing I put as a caveat on these trades last night, guys, is I told you about Euro Kiwi and Sterling Kiwi. I'm not a big fan of getting long Kiwi right now. We'll go over Kiwi Dollar in a moment. I do have it coming off support. We noted that on Sunday, or on Monday rather. And while you could get a little bit more of a topside pop, I don't want to get crazy with the Kiwi weakness. That being said, you want to take every trade on its own merits. And as it stands right now, Euro Kiwi is still coming into an area of interesting resistance. Here's what Euro Kiwi looks like on the daily chart. So it looks like we're trying to pop through it right now. There is a slope, a basic slope off the highs from last year, okay, which comes in just higher from where we're stretching right now. I can advocate even on an intraday position, guys, that we continue to chase this. If I was forced, if someone put a gun to my head and said get long versus a pair versus Kiwi, it would probably be pound, okay? But here's Euro trying to make a run into that trend line resistance. Again, this is a longer term trend line resistance. Put it on the intraday chart here from the highs of last year. Then there's really nothing till 62.27, okay? We were following this trade last week, rather, and this was the big zone. This was the big zone that we were talking about as our major target. Well, it looks like this week, guys, we broke it as resistance, checked it as support. The only thing that has me concerned is that momentum is real lackluster. And every high we've made this week after that breakthrough, 60.45, 60.70, has been on a divergent. Every new high we've made has been on a new divergent signal, meaning in the oscillator, you couldn't make a new high. So again, hallmarks of near-term resistance, hallmarks of near-term exhaustion, possibly. Do we have the conviction to do it yet? Not yet. Not yet. So possible stretch higher here in Euro Key. Again, also looking for some exhaustion ahead of 62.27 to play a near-term pullback. We'll continue to see if some of that divergence that we're seeing on the daily and intraday charts does in fact materialize into some near-term pullback for us to play. Ultimately, I love this trade higher still. But on the near term, you're certainly risking some exhaustion here for a pullback in Euro Key. Broader bullish invalidation at this point. I'm going to go ahead and raise that from 56.82 right to the 2016 open, former 50% retracement. As long as we stay above the 59 handle, you'll continue to favor the long side here in Euro Key. Here's the daily chart on the stretch looks like, by the way, guys. Right, we broke up pretty big, nice slope here. Really nice median line action, really nice pivots over the last year. Broke to the upside. Basic trendline resistance off last year's high, just higher. I do see a couple of new names in the room here. Just a quick reminder for anyone's in the room, if you'd like to take a snapshot of any of the charts that you see presented so you can review those throughout the course of the day if you're following them, there's a camera button, top right-hand corner of your GoToWebinar screens. Go ahead and click on that, and that way you can keep the charts if you need to reference them later in the day, guys. Okay, that is Euro Key. Any questions on that? A little timid on this. I'm not going to lie to you. I haven't touched it yet. I'll see if we can get that last stretch higher, but you know, looking for some exhaustion here on this stretch. Sterling Key looks like this. Okay, really boring right now. I should have probably just put this as a radar chart, to be honest with you guys, because I don't really think it's operable right now. But if you're trading on a real tight time frame, there's opportunity here for sure. It's got a big ATR. It's comfortable to play. The range is well defined. I just don't think you want to plan for any type of longer medium-term setup on this just yet. And the focus on this trade, by the way, is on the monthly opening range, which has taken shape just below a critical resistance range. We highlighted this critical resistance range a month ago. We came into it last week. Okay, here's what it was back in April. Okay, and we were talking about this range at 189.20 right here. We opened up the month right there. It's the 1618 extension from the advance off the lows. You had the median line for the current operative formation that we're still in, and that converged right here. That was right into the close of April trade. Well, April trade opens up 2 weeks later. Here we are with the monthly opening range just below resistance. These tend to be beautiful, beautiful plays. And what you want to do is you want to play the breakout. So if we do see a topside breach finally above 90.50, which is the upper end of that resistance zone and the highs that we made back here in November, you have a soft target there, which is just the swing lows from back here in 2015 at 192.42. But man, this thing's got room to stretch if we break through that. Real room to stretch. Again, taking it back to basics. Here's what the longer term chart looks like. Basic trendline resistance off the 2015 highs. Really nice slope, has offered some very nice pivots in price. Resistance, 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 break, support, support. The bottom end of the slopes that we made last year, perfect touch of that slope, has us right on the break. Focus is on this resistance region and this monthly opening range. Here's what the intraday chart looks like. Okay, so a near-term slope, I didn't put this, let me take a step back. I didn't put this near-term slope on the charts because I didn't want to clutter them up, but Here's what yesterday's chart looked like, right? And this is the slope I added. I'm just going to delete it right now to show you where we are. Here's, again, coming into key resistance. We missed it. Here's the resistance we tagged here last week, the pullback. This is still the key resistance zone, 89.20 into 89.50 that we were looking at on the daily chart. Right now, the focus is on this zone between the monthly open, which we're checking as we speak as resistance, and last week's low. That's the zone I want to see break to determine my immediate near-term directional bias. If we break to the upside, if you're looking for that stretch into this zone, again, topside target's 92.42. That's going to be that low from 2015. On a downside break, I do think you have free recovery down to here, 82.53. That's basic slope support. Former trendline resistance off the highs that we looked at in the daily chart, and they converge right down there. Obviously, this is going to be determined by time, guys, so we're going to want to pay attention to, the time decay for this setup, but largely speaking, that's the range you want to focus on heading into or getting deeper into the week. With a topside break, especially on a close basis above 90.50, really needed to get this thing going. And guys, if that happens, your first target is still, basically 200 pips away. So this is a wider range ATR. If you're newer to intraday trading or if you're newer to a shorter time frame type of strategy, might not be the best thing to get into right now. But for those of you who've been with me for a couple of years, I mean, this tends to be sort of a bread and butter trade if you catch it right. So focus on this consolidation. I know it's been a boring setup since the start of the week, really chopping people up, but the defined range below resistance is always going to be my preferred play, especially on a cross like this. Questions on pound Kiwi. Sitting right below resistance. And again, this, guys, is the Kiwi weakness trade I would prefer. So if Kiwi does materialize and you see sort of that start to play versus the Kiwi dollar and that starts to break down, this is actually the pair I'd play on a Kiwi run to the downside, I'd want to say, because I do like pound higher as well. So keep your eyes on that setup deeper this week. Okay, that's number 5, and we are running good on time today. Okay, so that's last night's update. I do want to take a moment and go over the previous day's update. Here's the 15th, where we highlighted a little bit more of the dollar crosses to start off the week on the back of last week's price action. So here's what Aussie dollar looks like on the daily, and here's what we look like right now. So making a reversal candle today off resistance yet again. We did highlight a bearish invalidation level of 74.40 last week, and that's exactly where this thing maxed out at. If you go to the previous update here from the 11th, that 74.40 region, wrong pair. That 74.40 region was the bearish invalidation level. As long as we stayed below that, we wanted to sell rallies near term in Aussie dollar. Well, you've had a couple of opportunities now. Today's the third day where this thing has butted up against 74.40 and given you that pullback, in fact, that we've been looking for. So the range and the levels still remain super clean. By the way, aside from it being a basic 618, it's also last month's low. So again, when price action speaks, let's listen. And today, we're actually making an outside day reversal. If, obviously, markets haven't even opened in the United States, but if we were to close at these levels, you would have made a near-term outside day reversal here from yesterday. And that, again, is not the most bullish thing per se, but you don't necessarily want to make any snap judgments. Just that near-term, you might see a little bit more of a decay. Here's what it looks like in the intraday chart. And a little bit more compelling on the intraday chart to be a little bit more cautious trying to fight this. All I wanted to highlight here, again, I am still short a minuscule part of the Aussie. Oh, Pooja. Okay. You were short from 74.28. Okay. Nice. So you're in the money. Really nice off the highs. 74.40 was our bearish invalidation. So Pooja, I love the entry. 12 pips off the high is always going to get me. And now you're checking, the only thing I want to highlight for you is you're checking the weekly open as support. So that's sort of a level of which will offer some support in intraday price action, really 73.85, that key 618 retracement. That's the level to break. I think, to get this thing going. I wouldn't get too aggressive on it just because, you know, Aussie's the weakest performer on the sessions. I don't know if I want to necessarily like continually fight that right into the U.S. Open as you've already stretched into the lows. But certainly near term, those are your downside targets I'd be focused on for your position. Okay, 73.85 is that 618. Again, a longer term 618, which we've already sailed through. And 73.67 is just that swing low, but a decent pivot in price. Basically, Pooja, what I want to tell you is this median line. You see where my mouse is right here on the daily chart? In my opinion, you want to be looking for that to target on your trade because, again, that caught the lows here. Nice pivot. It's the median line off the highs that we've been following. And might be sort of a region where you could find a little bit more of a bounce here in the Aussie. So keep that near-term target in play, but beautiful entry. Can't complain on that. Definitely have your stops in at break-even or better at this point, Pooja. Does that help? Let me drill down into this for you. Oops. Here's the 60. Yeah, there's not enough slope to the decline. So again, keep things objective. Your weekly open, weekly opening range low, Monday high, weekly opening range is set. Look for the break. Downside break, you got those targets pretty good. By the way, if you guys remember, and I hate to keep going back and forth, but if we go to the update from the what was it? Right here, from the 9th. We were looking for a reaction off the 100% extension. That's this, guys. That's this. So even if you get the downside break, what is this for? Excuse me, Pooja. Watch 73.35. Still sort of the ultimate region that we need to get through to really open up the downside in Aussie. Near term, you're checking the weekly opening range low here into 73.85. Pooja says, yes, thanks. Stops already at break even. Nice job. Well played, Pooja. I like it. Sandy says, I never trade Aussie dollar, just took to trading Euro Aus and Sterling Aus at is the driver for them. Sandy, I do like those pairs. Those pairs will have a bigger ATR. They're also playing out pretty nicely, right? We'll take a look. Aussie's been my favorite trade for a long time. If you go over the course of my career, I think I've done more Aussie trades than any other pair, to be quite honest with you. So I hear you. I hear you. And it hasn't been too really exciting over the last, couple of days, but I think the range, the levels are specifically clear here in Aussie. So look for this decline here, checking the weekly opening range momentarily. All right, that is number 6, Aussie. Questions on Aussie dollar? Pooja says Aussie yen already at 82.65. Yeah, she's making a move. I got one eye on that side and one eye on this side. There it is, guys. Look for near-term support. If you're holding short exposure at this point, I would be peeling some off. Coming into a big region here. Coming to a big region. And in fact, you even have a support trigger here. If you take it off the low in price, remember, we always want to take our support triggers off the low in price. Whether you do this, where it shows, whether you do this, where it shows a break of support, check as resistance, then move off, or whether you do this with the other subsequent low that you recently made here on the 12th, and you saw pop, hold as resistance, giving you divergence, then the breakdown. Either way you interpret this, that's a short signal. Now, obviously, we always wait for the close on the daily chart, but just to show you a couple of things that I will look at throughout the course of the day at the closes of the markets to confirm or validate or help conviction on my bias. And certainly this was something we were looking at as price action continued to fail right below the 60 mark in momentum, which is your hallmark for sort of near-term exhaustion on a rally. All right. Okay, Kiwi dollar, number 7. Here's what Kiwi looks like. Again, a lackluster trade, but near term, I think we're on the right track here. So here's what the 4-hour looks like. And here's what it looked like a few days ago. So Kiwi, on the daily chart first. Just to bring it back real quick, quick fresh reminder, we were looking at Kiwi dollar last week, noting that 68.28 was our broader key support structure. And we noted that the short side bias is at risk heading into this region. Well, you got the pop. So what now? I'm still looking lower, sub 69.70, but near-term price action, there has been an upslope that has formed that we highlighted a few days ago, which is still, in my opinion, something that we want to keep in focus. And here's what it looks like. This upslope. Okay. Now, I didn't have too much conviction on it to start the week, but now we do. Why? Well, we've got the tag of resistance. We got the pullback that held above support. And on this last stretch, we did make a new high, but failed ahead of the median line. So I think we're on the right stretch here. I do think you risk a rally back on 69.70 or so, which is why I was saying, because of what price action is doing near term in Kiwi, I'm not too keen on playing Kiwi strength, which is a little of my concern with the other Kiwi crosses that we talked about. Now, if you look at near term price action, and here's what the intraday chart looks like right here, you can see again, stretch into a new high, failure just ahead of that median line confluence, pullback. The key support zone at 68.60 into the yearly open is still sort of what I'm focused on. I thought I had updated this. I'm sorry, guys. Let me move this real quick. I don't want to stress that. I want to stress this range. Okay, 2016 open comes in at 68.28, got that 50% retracement at 68.60. I know it's a larger 30 pip range, but you can see we've dribbled into that. That converges on basic slope support. That's this. Off of the 2015, 2016 lows, specifically the lows that we made in August and September of 2015, specifically the January low of 2016, that level in red, okay, 2015 support line comes in right between 68.28 and 68.60. And you can see the low that we made there on building divergence. So look, from a momentum standpoint, from a price point standpoint, I still have to say that downside bias is at risk above 68.20. This is the level to beat to get continuation. Now, once that gives out, oh boy, okay, 67.50 is going to be 100 off the high. It's going to be a beautiful level. 67.15 is going to be a key 618 retracement, also a beautiful level. Obviously, where they hit on slope is going to be determinant of time, but certainly, that's the level, that's the barrier of entry to really get the free fall here in Kiwi dollar. That being said, don't put this thing past 69.70. I wouldn't be surprised if I do see that sort of fake out, everyone rip some faces off, then reverse. Remember, the upper parallel, okay, this is the 618 line. This is the 75 line, excuse me, of the bisector of this range, caught the exact high that we made here in late February. So if you extend that parallel, that still leaves room for a possible breakout if we make it above 69.70. Not my base case scenario. Why? 69.70, guys, is also the monthly opening range high, objective. And if you always, if you know anything about me, I try to keep things as objective as possible. So yes, there is a level there that we've been watching. Yes, there's a clear-cut pivot, lows, but now it's also the opening range high. And that further clarifies and defines the key range we're looking for in Kiwi dollar. All right, game plan, look for a rally to sell sub 69.70, close below 68.28 needed to really open the floodgates here for a more dramatic downside move in Kiwi dollar. Questions? New Zealand. Do have milk auctions on tap, so keep that in mind as you get deeper into the session today. Or dairy, rather. Could offer some volatility on some of the Kiwi crosses here. All right, that was number 7. Number 8, everyone's favorite pair. I'm saying that sarcastically, dollar CAD. And then we'll jump into the abomination dollar yen. That thing is doing actually some clarity as well. Here's what dollar CAD looks like on the daily chart. Guys, it's pretty clean. The 35.75 level was the level we needed to get through to really validate a more substantiated breakdown in dollar CAD. We bottomed right there. So I'm inclined to kind of sit on the sidelines here. I still am looking for a short. I did take a short earlier in the week when I told you guys as we were playing this, as it was kind of breaking down, looking for that move. 35.98 was where I got out. This is the bullish invalidation level we needed to get this drop into a key zone. 35 into 35.22 is huge. You got the 1618 extension off the high, the 50% retracement off the low, and both of those converge on the lower parallel later in the week down here. Whoop. I messed up my lines. Later in the week down here. Okay, so watch that sort of region as the end-all sort of key support here, near term, looking at the dollar CAD. Not a big fan of doing anything right now. It's a pretty tight ATR as it is, so unless this thing makes a break below that key support, or if we get another opportunity to get short near the weekly open, near the 618, I want to say 37, 37.10 would be an area of interest for me to possibly get back on the short side here, but this is really the level you need to beat. Key support down at 35, 35.10. A lot of people are going to be looking at this, and again, with what's going on in crude, I do think it warrants a little bit more of a softer approach. Let's call it immediate resistance right here at the monthly open. Okay, 36.55 or so. Sandy says, ever since I left New York, dollar CAD's another one I never look at. I'm crude long. We'll take a look at crude. Absolutely, we'll take a look at crude. It's on the list. Any questions on dollar CAD before we move off? Kind of lackluster. You don't really have an opening range to play with here, but look for resistance at the monthly open and look for a break below 35.75 to get this thing going. All right. Into the abomination we go, my friends. Here's number 9, dollar yen. Beautiful play. Jamie caught a short on this. Obviously, on the swing side of trades, you guys are out of half of that trade with the limit being taken out an overnight, the first target at 112.45. Look, the decline was beautiful. We talked about this earlier in the week. Here's what we look like. By the way, here's the dollar CAD levels from earlier in the week, unchanged. But here's dollar yen. You know, we noted early in the week that we got the break. This setup was from last week, guys, and we were saying that the long side bias is at risk below 114.60. We got the turn on beautiful divergence, and the pullback gave us a drifter, and that's where I started off the week saying, watch it. I still like the short side, but we got to hold below 1391. Well, we did. We drifted too high at 1383. You got the opening range or the break below the weekly open yesterday, and there's a decline taking out 112.40, which was bullish invalidation, 111.98, and now we're looking at this slope, which is coming momentarily here around 111.65, but more important is this zone, 111.25 to 111.45. Really nice pivot in price. You have the 50% retracement of the advance just off the near-term advance from the lows. And then you also have this swing high from back here in 2015, specifically, what is that, May? Right ahead of the June open. Okay, I saw some nice pivots here back in November, almost caught the lows back here in February and March, caught the highs back here in April, okay, and that region converges down here, just below where we're trading right now. So you got clear-cut targets here on the dollar yen as far as the move lower. You want to stay bearish intraday below 1240. The same level that was our bullish invalidation is now our bearish invalidation. What would shift my focus back to the long side? It would need to be a break above this swing high or this median line. So let's say I move back above 113, would sort of invalidate this near-term pullback we're seeing in dollar yen. As long as that holds, you want to look for that drop into 111.25. Can't believe I'm saying this, but finally getting some clear-cut price action. The abomination, right? Nice change. Just want to see what this looks like. See if we have any slope here. Okay, nothing yet. Nothing yet. Now, if we just channel this like this, and let's just say we call this a break and a check of resistance, further holiday. Now you can add another list to my Boutros' made-up words. Further validate the 1290, the 1239 level as resistance. And then again, bullish invalidation, I'm going to leave up at 1290. All right, I'm going to clean this up just for the sake of clarity here, but you get the picture. Key support, your term. I'm short dollar yen at the weekly range, as the weekly range broken. Is that what you're saying, Sandy? That was perfect. That was the way to play it. That was the way to play it. Because yeah, 100% I'm with you. That was the exact way to play it because the weekly opening range gave you a bounce. We noted 1392 is the bearish invalidation level, which was Friday's high. And then once you broke back below here, a stop against the session high was the exact way to play it. Well done. Well done. And the monthly open. You're absolutely right. Here's your monthly open. Oh, no. No, the monthly open is the target on this one. The monthly open comes into 112.25 into 111.45, excuse me. That's what I would be looking at on the dip here, Sandy. Yes, we're on the same page. Yep. Which is just above my weekly S2. Awesome. Yeah, so Sandy's a big pivot trader. I love hearing your pivot levels, Sandy, especially when they line up with the levels that we're looking at or moving averages or longer term median lines tend to be awesome plays. So I'm with you on that one, yeah. Watch the top of that range though, 111.45. It's kind of conspicuous because no one's looking at it. But I do want to take you all the way back here to those pivots. Since you're a big fan of the pivot, Sandy, 111.45, pretty big that no one's kind of looking at. So watch that range. Okay, any questions on the abomination before we move off? Dollar yen, whoops, don't want to do that. Going once. They always cluster with your levels, so I'm happy too. Amen, Sandy. Happy to serve. Okay, that's number 9. Let's get into your questions now in the order that they came in. So Sandy wanted to look at Euro Oz and Pound Oz. Sarab wanted to look at the commodity block. And Pete wants to take a look at the SPX. We got a couple of minutes left. Let's jump right in. Sandy, Euro Oz coming up first. Here's what Euro Oz looks like on the daily chart. Boy, this thing just doesn't want to take a break. So if you look, this is the setup that we highlighted earlier last week. I mean, it speaks for itself, right? I don't even think I need to kind of do anything here, but let's go over it nonetheless. We talked about the fact that the critical resistance range up at 48.90, essentially the 49 handle, okay? You had the 2016 open, you had the 2015 low day close, you had the upper parallel all converging there. We noted this resistance earlier in the month, and we did play the pullback. This was bullish invalidation. The pullback, guys, came right into the 50 line, or the 618 line, even cleaner, of this pitchfork formation, right? There's the 618 line. I don't know if you can see it at home. Was resistance last month. We broke through it earlier this month. Look at the pinpoint accuracy of that pullback that we made on the 12th, which vaulted right through resistance. So the reason I want to curb my appetite on the long side here is because now, just higher, we're completing a pretty convincing 1618 extension off the lows that gives you 50.46. We're probing the upper parallel. I don't want to stress this upper parallel, but you do have 2-point touch coming off of a parallel from this 2-point touch, so very basic slope analysis. We need to see a close above this region. Long bias is at risk immediately while below 50.46. It's kind of like the only thing I'm focused on right now on this breakout. That was a big target. You know, it's a euro cross. There's a lot of euro volatility. It could be just a throw over and a pullback. I don't know. But to validate it, there's a couple of things I'll look at. If momentum is able to close at these levels above 70, or don't fight it, guys. With the same respect, especially if momentum or price is able to close northbound of 50.46, sayonara. I'm not touching this thing. The one thing I was looking at earlier is that the high day close from back in September, which is right here, is invalidated if price were to close at this level. We haven't broken that high yet, right? But the high day close, let me just mark it for you, comes in right here at 49.60. So on a relative basis, as long as we don't max that high, if we pull back and close below 49.60, I do think you risk a pullback. That being said, this is something you'll keep on the radar for me, Sandy. I don't really think I'd get involved in this from this mark, but definitely you're coming in some near-term resistance. Still holding half. Are you on the long side? Sterling Oz, you're long from 73.60. Oh, Euro Oz, excuse me. Euro Oz, you're long at 47. Okay, great entry. You're trading at 50.17. Yeah, I mean, again, 50.46 was a big region for me, Sandy, so I would be doing something up here. Again, I can't tell you exactly what to do, but this would be a level of which I'd start shaving some off. I would just bring the stop up. You know, if this thing plows through, there's really not much I have until basic channel resistance or basic trendline resistance extending off the highs from 2015, and that takes you, you know, as high as like 53. Now, we could start to do this. Let me do this first. I do want to tack on a quick retracement of the all-time sort of move here from that high. Just to give some reference, the 50% retracement comes in at 51, and that matches the high, or just about the high that we made right here. So let me just change that. And we'll get rid of that 38.2, clean this up a little bit. I'll drop that high day close as well, just to give you a little bit more clarity on price action. Get rid of that 100. Okay. Now, if we were to make some sort of convincing reversal off this today, your first go-to, guys, is going to be a basic retracement of the yearly range. And for argument's sake, I'm doing this as a drill in the room. We have no way of validating that this is any type of concrete high. So I'm going to premise that right now. But just as a drill, if we were just to take on a quick retracement, if that reverses off that level, a basic 236 comes in right there, 147. Okay? Swing lows, the 618 line that we talked about, slope, extending off the highs, initial highs that we made from March, and the longer term basic trendline support off that December 2015 low, which we were talking about. All of those converge down here at 46.90, 47, bullish invalidation. Topside break targets, you know where to go. Oh, Sandy. Okay, now at the weekly R2 and the yearly pivot. All the more reason to watch your topside appetite while below that 51 handle. Any questions on Euro Oz? Definitely a trade that we've been following over on SB as well. You can find all these, by the way, as always, by either searching the site or you can find them right here on the intraday charts. Euro Oz, here's what we look like last week. Okay, there's a key region of resistance, popped right through this 50.46. That's what we're testing right now. And again, bullish invalidation, which we had last week here at 46, that's been raised now to that 47.08 level. Okay, basically right around here. Okay, moving right along. That is Euro Oz. Let's pick up the pace here. I'm heading towards the end of the session. Sterling Oz, here's another update for you as well. Here's what that chart looks like. Kind of a little bit more lackluster. Obviously, you've seen a little bit more upside in the euro so far this week, but as far as pound Oz is concerned, Sandy, let me take a look at the intraday chart for you. I don't think I've updated this yet. Okay. In fact, again, I'm taking a look at this for the first time in a week here, but in fact, this is a simple break of the weekly opening range. Here's your weekly open. I obviously checked that out on Sunday. Here's your weekly open. You set a high early in the week. You set a low on Monday. High, low. Check the lows again. Break of the highs. Keeps the focus higher while above 174.60 right now. Looking for initial resistance at 76. The only thing I don't like about this trade, Sandy, is that I don't see much momentum in it. And that's also largely spoken for by the daily chart. So you can see that the daily chart kind of came back, gave us a trigger break last week, and we're kind of curving back. If we were to pop through 70, it would be a conviction sort of reversal or a continuation, let's say. But near term, I think this one, you might see some more consolidation sideways action before you actually get a material move. Here's what the monthly break looks like. I'm not sure why it's not in there. Okay, so here's your monthly open. Kind of ran right through. Pullback. Last month's high is offering some support. This is the only thing I'm also looking at. Basic trendline support off the lows, ticket parallel, extended off the highs from December of last year. Did give you resistance into the close of last month. The pullback broke through that initial support right at the monthly open, which converges on that same trend line. So this is near-term support. Let me make that orange for you guys. This is near-term bullish invalidation level right here, right? The 2017 open. As long as you stay above that, you want to stay constructive. Topside break, you're still looking for that rally into 77.87. Huge region. Okay, caught the highs that we made in July and September of last year. And both of those converge on the upper parallel if we're able to make one last stretch higher. Another trade, love it to the upside, broadly speaking. Okay, we've been talking about this one for a while, and certainly the break above the yearly open early or late last month was sort of end all for me. But I do think, again, you risk a little bit more of a pullback here on this sterling. I largely want to look to buy those pullbacks. Yeah, Sandy, I like both of them too. I would have to say pound Oz for me is a little bit more shaky at this point just because intraday price action. Or I would say this is a little bit better for me at this point because intraday price action has made a clear-cut range of the weekly opening break. I kind of like those plays a little bit better. And the reaction you got at that confluence support that we've been looking at, right? Median line, former swing highs, pretty nice vault through the weekly opening range. Yeah, Sandy, is that what you're saying, that it's not very healthy that you like Euro Oz and Pound Oz? I would say, yeah, here's the thing, guys. She makes a good point. Guys, it's not yet. Let me take a step back. You don't want to load up all your trades on one directional bias, especially in one pair, just in case that pair does reverse. You can kind of take a double whammy on it. But she's saying Pound Oz is not so healthy this week. Well, the only thing I would say about Pound Oz is the opening range in near-term price action is what I like. So what we're seeing on the intraday charts is what I like. The larger picture still is shaky, absolutely, because we can get that spike into here or we can get the dip into key support before. So I don't know what happens first. Put a gun to my head, I do think that you possibly get another move into the lows here, then a rebound. But as it stands right now, the weekly opening range break keeps the focus higher above 75.50, basically. Basically, that median line, the former high right here. Like this. Real near term, and I'm just going micro for you. Looking for a stretch into 76. All right, so that's Euro Oz and Pound Oz. Sarub, let's take a look at some of the comms for you, my friend. He wants to take a look at gold. Here's what gold looks like. So whether this is going to be, I already woke up this morning and the first thing I saw on all these financial publications was gold bumps because of the Trump Comey debacle or whatever. Whatever you want to call it, safe haven or not. We've been talking about gold coming off of a key support zone. This is silver, by the way. We've been talking about gold coming off a key support zone. That support zone was basically this basic trendline slope. Now, if you guys remember, 1208 was what me and Jamie were looking at. I was looking at 1208, 1210, this region here. You had the median line off the highs. Excuse me, you had the 50% retracement of the entire range from the December lows. You had a whole bunch of stuff down here. Well, markets had something different plans. You turned right ahead off of basic trendline support from the low that you made here in January, late January, and late March. There it was, perfect tag, rebound. Now you're going through the 200-day moving average, through slope resistance, okay? And it's taking you back above the 50 line here. So what does that mean, Mike? Does that just reverse the whole game plan? Certainly change in behavior, okay? When we see these changes in behavior, you don't want to necessarily go right with it because that you've recognized the change means it's already happened. At the same time, you don't want to start chasing it, right? So I do think on this kind of trade, you want to wait for a little bit more of a rally. Near term, guys, we could play the pullback if we get into the upper parallel. If you're trying to play the rally, I don't think you do anything unless you get back pull into like 1242 or that 200-day moving average again. If you find some support there, it might be worth a launch into the monthly open. But from here, if you're trying to enter new exposure, I really don't have anything for you, to be quite honest. Sarub, I mean, you broke resistance. I can't advocate for you to chase up here. If you're holding long exposure, here's what I'd be looking at. You just tagged the 50% retracement. And if you take some slope lines off the highs, extended off that high that you made back in the 24th of last month, you know what I mean? We're basically there now, right here. And that converges on the 50% retracement at 1254. So I'd be cautious of any long exposure on this trade heading into the U.S. Open while below 1254. It's clearly an upside trade. I don't think you necessarily, even if you take a short on it for an intraday move, I don't think it's something you want to hold on to. But certainly the immediate upside bias is at risk sub 1255. Sandy saying gold has also broken the weekly range to the upside, already at weekly R2. So that's awesome. We're already at R2, Sandy, right? I wouldn't necessarily stress the weekly opening range in gold just because you never really got a set opening range. I mean, you could say that this was a weekly open range right here. Here's your low. You set a high. You tried to check the low. You didn't quite get there. And then once you broke the high, you can consider this an opening range. Sure. I wouldn't say it was a clean opening range break, but certainly you can interpret that. And that would keep your focus, again, yeah, higher above basically like 1236. Get rid of that 236, actually. Let me do this. I would use this. Near-term support, 1236. Okay. And give me one sec, guys. I just want to see what this looks like. Okay. Okay, so guys, check this out. This median line formation here I just added. Look what it highlights. Same key region of support. Opens it up a little bit. Lower parallel. You saw the upper parallel catch this spike high. We sat below that. This is a 2-hour chart, so we sat below there for almost a complete session. Tried to spike through, closed below, failed. Once we did, the acceleration. And that's your tell. That's your tell on whether you're on the right slope. That's your tell on whether you're on the right resistance or support, is whether price action, when it finally gets freed of that, does it accelerate or does it just mutter higher? Okay, and on the acceleration break, that's what kind of gets the juices pumping. So this is great, and it also highlights resistance near term at these two levels, areas of interest for exhaustion, key resistance just below the monthly open. Sarub, does that help on gold? Prices opened above the last week's close and never came back as far as the gap is concerned here, Sandy, right? Yeah. I don't think you can see it quite as clean on the FXCM feed, but I did notice that. Sarub, so while above the median line, I think you're still at support, 1245. Bullish invalidation, 1236. Top side, you're looking at this region. Let's call it 1260 to 1264 as your sort of big spot of near-term resistance, near-term on gold. Hey, you're more than welcome. I got to run through the others because we're over on time, so let me just touch real quick. Here's copper. I don't really have anything intraday for you on copper. This is what I would look at on the daily chart. We've been largely following this median line. I don't like that it did that last week, so I'm kind of off topic for copper right now. What I do want to say is you're marking divergence all up into these lows, and it's been doing that for the last month. So I don't know if that's a signal that we're seeing a little bit more of a serious divergent trade here as traders try to push this. Key support, you know, I was looking for 243, 245. The 200-day moving average is now sliding out of that range. So, you know, I wouldn't be surprised to see a dump into that. But with what's happening in the dollar coming off support, this dollar strength may be the fuel needed to get that last dip. This is kind of the key support you'd want to look for in copper. Intraday, I don't really have much for you on this one, Sarub. I'll try to see if I can't put something together for tomorrow's session. Moving on into the other commodities, really quick, here's what crude looks like. Just to go over crude intraday real quick, this is the region of resistance I'm looking for, obviously, just above the weekly opening range highs. You can see the pivot zone that we've made here in price over the last couple of months. This is an old parallel, right? But the slope still works pretty decent. Still been getting some support on the break, acceleration. You know, all the median lines have been pretty decent. If you extend that same slope off the highs that we made from last month, converges on that big pivot zone between 49.60 and 49.86, specifically heading into like the end of this week, next week. So that's sort of the big resistance region I see. Also, if you tack on a basic retracement of the most near-term decline in crude, some interesting levels come up with the 618 level also right there. So sort of a big juicy zone here for crude as far as what I'd be looking at on another topside stretch here in price. Okay, that is crude prices. And silver, here's the silver chart. No change to any of those levels. Again, you made it through the median line. This was a big break right here. Looking for resistance at 1712 into the monthly open. That gives you 1719, 1712. It's also the 50 line for the current operative descending median line formation. Area of interest for possible exhaustion here. Divergence in price action on the 120. So be careful. Wouldn't be looking for any new long exposure. In fact, I'd be looking for possible exhaustion near term into this region. You want to buy a pullback while above this median line. But as it stands for now, I think the risk is for still another push higher near that 1712 level. Let me do one more thing real quick. This is a 50%. I just want to see what the near-term retracement looks like off the highs. Okay. So keep these as your break targets if we do break this median line. But Sarup, feel free to take a snapshot of that chart if you need it. Okay, Pete, last but not least, I keep my promises, my man. Here's what the SPX looks like. I do have to run, but the SPX, I just want to show you the daily chart. I don't really follow this on an intraday basis. I don't really scalp this or intraday as much anymore these days. But look, if all I wanted to highlight here is a very clean monthly opening range. That's it. That's it. Don't try to look at the whole Trump and all this and what's this going to mean. Price has set a very clean monthly opening range. It's the 17th of the month, which means once that range break happens, you're likely to see a little bit more of a run. Key support is still going to be down into this zone right here, former resistance, 100% extension. 618 retracement I don't want to even look at right now, but one thing I did want to consider, we'll leave that there as the next top side if we break. And at this point, I just want to see what a basic retracement off this low looks like. 618's right there. And this extension null and void. This extension null and void. Puts the focus on that. And we have no way of validating this, by the way, but just as a drill, I want to see what this pitchfork looks like. Ooh, okay. Pay attention to that. Pay attention to that. Okay, you see this pitchfork? Resistance, resistance, resistance. The median line comes in on a basic 618 retracement of the near-term advance off the lows that we made in March. And the opening range low that we made for March right here. You see that swing low back on the 9th? Big region, 2354. I know it's away from where we are right now, okay? It's 30 points to the downside in the S&P. It's a kind of a sizable move considering the range that we've been in since the start of the month, but certainly on a break, on a close basis, below the monthly opening range for May here, definitely puts an initial target at 2354, that basic 618, specifically in time as it converges on those median lines. Okay, topside resistance and broader key resistance right here, 2419. That's the level for, sort of a crazy breakout play. We'd have to reassess if that happens. Not my base case scenario. I do think you risk it. Okay, remember, we're seeing divergence in price action on the daily chart. Even on the last couple of swing highs here, you had some divergence. Okay, forget about the spikes. Bring it into a line chart to always validate that. Price action with a higher high. The oscillator, lower high. Lower high. So the hallmarks are there. Keep your eye on possible weakness here in the SPX. All right, guys, we're going to wrap it up here. I'm way over on time. Thank you so much for everyone who attended. Don't forget, Jamie will be on board at 12 o'clock later today for the midweek strategy webinar. I will see you all bright and early tomorrow morning. We're still kind of light on data, so don't really concern about that. Headline risk is definitely there, so keep your eyes on the headlines. We'll certainly try to keep you updated on SB Squawk. Best of luck trading, and we'll see you tomorrow. Cheers.